Hello, today we're here to talk about one of the most common areas that we see people fail to address as it relates to their finances, and that is they don't take the time to calculate how much life insurance coverage they really need, and then they don't go to the trouble of securing that level of coverage. Now, hey, we get it. Nobody thinks they're going to die. Nobody wants to think about dying. Many of us don't like dealing with life insurance agents, and we definitely don't like making any sort of insurance premium payments. But at the end of the day, if you are married and you have an income disparity or you've got children that are dependent upon you, we strongly encourage you to make sure you work through the calculation of how much coverage you need and then secure that coverage. So as it relates to life insurance, there's two different types of insurance policies that you can look at. It's the permanent policies or term life. Now, permanent policies are generally called whole life, universal life, variable universal life. These types of policies are generally more expensive from a premium standpoint, and the reason is they build up a cash value and they go on in perpetuity. They don't have a maturity date. Now, we are not big proponents of permanent life insurance policies only because they are just very complicated to understand, and many times the insurance agents make sort of promises with their illustrations in terms of rates of returns on your cash value buildup and the fact that you can tap into your cash value tax-free in retirement. And these are not misrepresentations, but they're sometimes half-truths. We are much more bigger proponents of term life insurance. One, because it's cheaper, you're just renting your insurance for whatever term you elect. But two, many times throughout your life, your need for life insurance kind of dissipates over time as long as you're doing the right things financially. And so with term policies, let's say you need $2 million in coverage, we would say layer or ladder those policies and do a $1 million 10-year policy and a $1 million 20-year policy, and it helps keep your premiums even cheaper over that time period by doing so. So some of the things you need to consider as it relates to how much life insurance you need, and keep in mind this is not a perfect science. There's all kinds of calculators online that you can work through, but some of the major considerations you're going to want to think through is one, do you have any legacy goals? So some people want to leave a certain amount of money to people. Two, are you single or married, and do you have dependents? So if you have dependents, you know, what age are they? Do they have daycare expenses? Are you sending them to private K through 12? Do you have education goals? If you are married, does your spouse work? If they do work, how much is their income level versus your income level? Another thing you're going to want to consider is what is your overall debt levels, because many times, you know, if something were, God forbid, to happen to you, you'd want to leave your loved ones debt-free. So we kind of start off by saying, hey, your coverages should at least leave your loved ones debt-free. If you have education goals, you add that in. But then the biggest mover of this is what is your income that the family needs to replace. So you kind of look at your net paycheck and you say, well, geez, if we're spending this as a family, this needs to be replaced should I be gone, because you don't generally want your family to have to lower their lifestyle just because you're no longer around. So that's the biggest component of this whole life insurance need. But then you also get to factor in, if you're a good saver, you know, if you've saved enough money or a good sum of money, you can deduct that from your life insurance needs. So these are all the types of considerations you should be thinking about as it relates to how much life insurance you really need, keeping in mind that we are strong proponents of making sure you do the calculation, but then you also go to the trouble of securing coverage. So hopefully this information has been helpful to you. If you have any further questions, please feel free to reach out. Thanks.